Okay, let's unpack this. We're diving into something, well, pretty transformative happening right now in the U.S. financial world. FedNow.
Mm-hmm.
And we've got some really interesting source material here from FinCrime intelligence. They're really focusing on, the other side of the coin with this new speed, the financial crime and compliance side.
That's exactly right. So our mission today really is to understand not just what FedNow is and how it's supposed to work, but specifically to pull out the key insights from this analysis. What are the opportunities? And maybe more critically, what are the challenges it throws up, especially for the folks dealing with security and regulation?
Yeah, because FedNow basically lets money move instantly, 2047 in the U.S.,
Yeah.
which sounds amazing, right?
Right.
Super convenient.
Absolutely.
But as FinCrime Intelligence points out, that speed brings up some tricky new questions. Like, can our current systems, which were built for, a slower pace, actually keep up?
That's the core question. It really impacts how money moves for, well, everyone. It brings us incredible speed, sure, but it also demands a whole new level of vigilance and operational seriousness.
Definitely. So let's jump right in. At its heart, what is FedNow? And why does this analysis frame it as such a big deal?
Okay, so fundamentally, FedNow is what's called a real-time gross settlement service, or RTGS. It's run by the U.S. Federal Reserve.
RTGS, okay.
Yeah. And what that means basically is it provides the underlying pipes, the infrastructure, for banks and credit unions to send money to each other instantly, with the settlement, the final movement of funds happening almost immediately.
Ah, okay. So it's the plumbing that connects the banks that we all use.
Precisely. And the goal here, according to the source, is really about boosting efficiency, making it more accessible, and strengthening the whole U.S. payment system. It's designed to cut down the risk of settlements failing and just generally encourage more real-time payments across the board.
And this isn't entirely new globally, is it? I mean, other places have had this kind of thing for a while.
That's a really key point the analysis makes, yeah. The U.S. is sort of catching up, in a way. Think UK's faster payments or India's UPI. FedNow fills a pretty critical gap in the Fed's own services, offering this central bank-operated, always-on, instant system.
Right.
And by providing that direct connection, it kind of levels the playing field. It encourages competition, innovation, because it lets more institutions, even the smaller ones, get into real-time payments without having to rely only on, say, private systems.
Got it. So it's like building a public highway for instant money alongside maybe existing private toll roads.
That's a good way to put it.
But that real-time bit,
Hmm.
how different is it really from what we're used to? Like sending money through ACH or a typical wire was a fundamental change.
The huge difference is the speed and the finality. ACH works in batches, right? Payments get collected and processed later. Wires, they only run during business hours. FedNow handles each payment individually, instantly, around the clock. And crucially, once that payment goes through FedNow, the money is available right away to the receiving bank. And it's final, or near final. There's no waiting for settlement cycles like before.
And that instant access is literally 24 hours a day, 7 days a week, 365 days a year, no breaks.
Exactly. That always-on availability is central. And the source points out the kinds of payments it's built for pretty much everything. Person to person, paying a friend back, business to business payments, government sending out funds like stimulus maybe, paying bills, even getting your payroll.
Okay, let's bring that home for our listener. If your bank is hooked into FedNow, what does this instant 24/7 finality actually mean for you day to day?
Well, potentially it means getting your money instantly. Like imagine your paycheck landing in your account the very second your employer sends it.
Wow, okay.
Or say getting emergency government aid immediately when you need it most. For businesses, it's huge for managing cash flow. It just offers the speed and flexibility that's, well, way beyond the old methods.
That speed, that convenience, it really does sound revolutionary. But here's the turn, isn't it? This is where the FinCrime intelligence analysis gets really critical. That instant finality means if something goes wrong.
You can't just hit undo.
Exactly, no takebacks.
Precisely. And that's the core challenge the source hammers home, that speed and near finality. They massively increase the risk for banks. If a payment is fraudulent or just sent by mistake, once it's cleared through FedNow, getting that money back is incredibly difficult, maybe impossible. Because it's settled, it's available.
So it raises that huge question. How on earth do banks stop fraud when they have, seconds, milliseconds maybe?
Yeah.
Before the money's just gone?
It's a race against time, absolutely. A very, very fast clock.
So what does the source say compliance teams need to do? How do they adapt?
Well, the analysis lays out several really crucial shifts. First, institutions have to strengthen their fraud detection systems so they work in real time. They need to be actively scanning transactions before they're finalized. It's a big shift from finding fraud after it happened to preventing it as it's happening.
And that has to start right at the door, I guess, when someone opens an account.
Absolutely. Things like identity verification, knowing your customer, those onboarding controls, they become even more critical. You have to stop bad actors from even getting an account they could use for this stuff.
Right.
And beyond that, the source really emphasizes needing sophisticated tools, things like behavioral analytics, risk scoring systems, stuff that can instantly spot weird activity. Is this payment way out of character for this customer? Flag it now.
So it's not just about who they are, but how they're acting, financially speaking, in that very moment.
Exactly. And this real-time pressure applies to all the standard checks too, like AML, anti-money laundering screening, checking against sanctions lists. Traditionally, there might have been a bit of a buffer, maybe while a payment was processing or waiting to settle to run those checks. With FedNow, those checks have to happen at the same lightning speed or they're useless because the money's already out the door.
That sounds like a massive tech lift for some institutions. What about when inevitably something does get through? The source mentioned dispute resolution.
Yeah, that's another big one. They need clear rules and processes for handling disputes and figuring out who's liable when things go wrong in this instant world. The old ways of handling disputes for slower payments might just not work.
Right.
And institutions also need to look hard at their reporting and record keeping. How do you track and report millions of instant transactions accurately for the regulators? It's a different beast than dealing with batches.
It really sounds like the whole playbook for compliance has to be rewritten, moving from something that had built-in time delays to something that's happening and needs decisions in real time.
That sums it up perfectly. It's not just plugging in a new payment rail. It's fundamentally changing the rhythm, the whole architecture of how risk and compliance have to operate.
Okay, so huge challenges on the security front. But the source also talks about another aim for FedNow improving financial inclusion. How does an instant payment system help there?
Well, the thinking is, by offering this infrastructure through the Fed, a public entity, FedNow can lower the barriers for smaller banks and credit unions to offer modern real-time services.
Okay.
And that, in turn, could help underserved communities get better access. If real-time payments become cheaper and more widely available, it might reduce reliance on things like expensive check cashing services or payday loans for people who need their money fast.
That makes sense. And you mentioned government payments earlier.
Yeah.
That plays in here too.
Definitely. A key benefit highlighted in the analysis is that FedNow offers a way for government agencies to get essential funds, disaster relief, benefits, emergency aid out to people instantly when they need it most, much faster and maybe more efficiently than mailing checks, for example.
Okay. Now, you touched on this earlier, but FedNow isn't the only real-time game in town in the U.S., is it? There's the RTP network already running. How does FedNow fit with that?
Right. That's an important distinction the source clarifies. So, yes, both are real-time payment networks. But the key difference is FedNow is publicly operated by the Federal Reserve. RTP comes from the clearinghouse, which is owned by large private banks.
Public versus private.
Exactly. And the thinking, as noted in the FinCrime intelligence piece, is that FedNow's existence will likely encourage wider participation in real-time payments overall, particularly among smaller banks or credit unions who might find connecting to the Fed's public system maybe more straightforward or accessible.
So it's not necessarily direct competition, but maybe more about expanding the whole ecosystem, making real-time more available generally.
That seems to be the idea. Having multiple networks could even, down the line, encourage them to work together. Better interoperability is the term.
Right.
Which, could make the whole U.S. payment system more efficient, more resilient, reach more people, competition, and maybe cooperation, improving things overall.
Speaking of resilience,
Yeah.
run it 24/7 instantly.
Yeah.
Cybersecurity must be absolutely paramount. The stakes seem incredibly high.
Oh, unbelievably high.
Yeah.
Yeah. Real-time payments just raise the urgency for rock-solid cybersecurity defenses. The analysis actually details some key requirements for any bank wanting to connect. Things like ensuring their systems are always available, super resilient against attacks or outages. That's table stakes.
Non-negotiable.
Totally. Plus, strong encryption for all the transaction data, secure ways for customers to log in and approve payments, and this is crucial really fast, effective plans for what to do immediately if there's a breach or major fraud attempt. Incident response has to be instant too.
I assume the Fed is providing some standards here. They must be.
Oh, yes. The Fed has put out quite a bit of guidance, technical specs, certifications, all aimed at helping institutions get ready and making sure they meet these pretty stringent security requirements before they can join the network.
Okay, so zooming out, looking the big picture based on this analysis, how truly transformative is this FedNow shift expected to be?
The source definitely frames it as a major transformative moment. As more banks sign on, the expectation is it'll really push digital transformation across the whole financial sector, not just in payments, but everything touching them.
Right.
It's expected to drive innovation both in how payments work and in the technology needed for compliance. And it's likely to fundamentally change what we, as customers, expect in terms of speed and convenience from our financial services.
But it always comes back to that core tension we've been discussing, doesn't it?
hmm
That incredible speed versus the ability to actually control it and keep it secure.
Precisely. It demands this huge realignment, maybe even a reinvention of how fraud prevention and compliance have traditionally worked. Institutions really need to invest in new tech, yes, but also in training their people differently, maybe forming new kinds of partnerships, all just to manage these new risks
Yeah.
effectively in a world where literally milliseconds count.
Well, this has been a really crucial deep dive into FedNow, especially looking at it through that financial crime and compliance lens, thanks to the insights from FinCrime intelligence. We've definitely seen the clear upsides, the speed, the potential for inclusion,
The benefits are real.
but also these really profound challenges,
Yeah.
especially for the banks and credit unions who are on the front lines trying to stop fraud and meet all the rules, but now at warp speed.
Yeah, the analysis really drives home that the success, and maybe more importantly, the safety of this whole modernization, really depends on the industry's ability to adapt its defenses to match this new pace of money.
Absolutely. And it leaves us with a final thought, maybe a provocative one for you, our listener.
hmm
With money potentially moving instantly now, 247, and knowing about these risks we've discussed, how might you need to change your own habits, your own vigilance around watching your accounts, securing your information in this faster financial world? Something to definitely think about as things continue to speed up.